and get going. Well, thank you so much. And in the next 25 minutes, I'll try to explain to you, both in theory and in practice, how the new conditional orders functionality on Darwin's works. This is Juan. I'm one of the co-founders with DarwinX, and I'm really, really grateful to have you with me today. So the agenda we'll cover will be to go through a few basic concepts of what a Darwin is, because they have an impact on how conditional orders work, and I think it's useful to just review beforehand, so it clarifies it. Then I'll walk you through the theory of how the system thinks of conditional orders, which will hopefully equip you to understand its reactions, with a couple of technical points that are relevant, and then we'll just review the whole thing in practice on the interface, which will hopefully help you guys understand better than going through the theory. Does that make sense as a starting point for your agenda? If you have any points that you'd like to cover, which I haven't really outlined in the agenda, do let me know, and we'll either do those as we go, or we can cover at the end of the session where I've booked some time for Q&A. So feel free to add. Further, one thing I haven't mentioned is that conditional orders are for now only available on demo portfolios. The plan is to road test them with the demo portfolios, and once we're all happy with both the technical backend as well as the documentation of how we explain it, and also the usability that you guys have helped us out in ironing out the kind of the small nagging issues. Once that's live, once that's good, we'll go live on live investments as well. All right. So a bit review of the Darwin concept. So at DarwinX, we are an exchange that lists MT4 trading accounts as a tradable asset. So we essentially allow any investor to buy the MT4 account of any independent trader. Now, in doing that, what happens is the trader is typically a customer of the DarwinX broker. He will be trading his own MT4 account, or in future also other technological platforms. And whenever the trader places a trade on his MT4 account, any investors who have bought the Darwin link to it, will see their money reflect that trade as well. So really what happens is an investor who replicates, buys and sells the same assets as a trader. In essence, and actually Darwin stands for a dynamic asset and risk-weighted investment. You think of it as a dynamic ETF, where you know the assets that are eligible to go into it, but you don't know the weights, because those are being changed and decided dynamically by the trader. And a Darwin quote, and this is the important thing, reflects real time the market value of the underlying assets. So say I buy, so Aziz has just opened an MT4 account with DarwinX that is now available for Darwin listing, and he's listed the Darwin. So I buy Aziz before he places his first trade. My Darwin will reflect the price of 100. Whenever Aziz, say, buys the euro dollar, he will be in the market, and my Darwin will reflect real time the fact that I, as an investor, just bought euro dollar. I don't know what I've bought to protect Aziz's intellectual property, but I've bought it, and the quote of my Darwin moves accordingly. And it moves if the underlying prices move. Obviously, if Aziz closes his trade and he's then flat, he's out of the market, and that will also be reflected in the Darwin quote. The Darwin will stop moving at that point. Importantly, if say I join and buy Aziz's Darwin when Aziz already had open assets, and I join at a time when, for whatever reasons, the market is closed, say on a weekend, or through the 5-minute window where we close Darwin's for investments at New York rollover, then I will not be able to trade the Darwin. I will have to wait until the markets are tradable again, because the replica trades will be delayed until that point. Last but not least, which is a point that we get asked a lot, say if the trader's base currency is, say, different from my investor currency, let's say Aziz's account is denominated in US dollars and I buy him, but my investor account is in euros, then I'm actually incurring a bit of an FX risk for the euro dollar base currency risk, and that will be reflected in my my investment value not moving 1-to-1 with a quote of the Darwin, because the quote of the Darwin is same currency. Okay, it's kind of a bit of a technical thing, but it's one that you should bear in mind. So, any questions on this basic Darwin way of working? Because if there are any, it's probably best that I tackle them now. So hopefully I don't lose you guys for the rest of the webinar. Okay, looks like you're either shy or you got it. So if anything comes up, feel free to type the question going forward. And now we get going with the conditional orders. Now, very important, the basis of this is what we've built is a little price monitoring robot that will be looking at all times at the quote of a Darwin, and we can give it instructions like, if price does this, then buy or sell. So buy would be a buy limit, as we'll explain in a second, or sell via take profit or stop loss if the price hits some other level. And then, of course, the question is, so which investment will I buy or sell? Well, or which trade will I undo when that happens? Well, the system operates on the first in, first out system. So if you've had an investment for £1,000, say in a Darwin, on a first buy, and a £1,000 in a second buy, then your stop loss for 1,500 will first sell the oldest order and then half of the newer order, because it operates on the FIFO principle. Close oldest trade first. Now, importantly, because what we're doing is going to the market to kind of build the composition of the portfolio, we're not really talking about strict limit orders. So when I said, say, I've got a Darwin that is now listing at 120, and I want to program a stop loss at 115, then what will happen is that the price monitoring robot will be monitoring the price, and whenever he's told, oh, the quote has touched 115, then it will send a market order, which will then get filled, hopefully close to 115, but not necessarily exactly at 115. It could be 115.01, it could be 114.89, and at times of high volatility, there could be some slippage in the system, because again, these are market orders conditional on touching a price. They're not strictly limit orders. I've said this already implicitly, but it's worth reminding, the entire conditional trade engine builds on the Darwin quote. So all we take into account is the Darwin quote. That's the kind of the currency to program the stop losses and take profits. And last but not least, all that the conditional orders are doing is monitoring the price for us and then using the system in a way, in exactly the same way that we would use it, where we 24 hours as 5 days a week in front of the system. So if we wanted to buy, say, $10,000 worth of a Darwin, but there's only $2,000 in our account, the graphical user interface, the GUI, would reject the trade. And similarly, if we program the take profit for whatever reasons in the wrong format, then it will also be rejected. Okay, so that's the base logic of how it all works. And then to protect ourselves from denial of service attacks and things that could happen if people wanted to set very narrow intervals for the take profits and stop losses, whatever price you set has to be at least 0.2% off the current listing price, or else the system will not accept it. Okay, those are kind of the basic rules of engagement when it comes to Darwins. So now we get into the order types. Let's say a Darwin is now listing for 120, and for whatever reasons, maybe because I'm trading Darwins, I don't think right now is a good point to enter. So I do think, though, that 110 is a good point to enter. This is just for the sake of argument, because of course 120, 110 is a big movement. But let's just say, for the sake of argument, that I wanted to enter 110, provided that is hit, then I could enter a buy limit into the system. We'll see in a bit how that works at a quote of 110. And again, the system will take it if it would have taken it anyways if I did that manually on the GUI. So remember, the idea here is we've got a price monitoring robot to do it. And then in addition to the buy limit of, say, buying at 110, I can conditionally set a stop loss and a take profit linked to this buy limit. So I could say a stop loss of, say, 105, where my buy limit to be activated, and a take profit of 115. Both take profit and stop loss will be conditional on the buy limit executing. If the buy limit is not triggered, then the stop losses and take profits have not actually been entered in the system. So I cannot trust that if the price were to go down from 120 to 105, that I've got a stop loss there, because I don't. Provided, well, you would, of course, if the buy limit had been activated, but if it hadn't, then you wouldn't. And again, we've got this 0.2% acceptance threshold for technical reasons. Over time, we may well reduce this threshold to make it more appealing, but for now, that's where the numbers are. So we've talked about the buy limit rationale. So let's say I just want to do a plain stop loss or a take profit. So I want to hedge my risk if things fall from 120 to 115. So I enter a stop loss at 115. And I can add it for the entire long investment. So if I've got 2,500 euros worth of investment, then I'll be able to enter one or multiple stop losses at different quotes for a total of up to 2,500, but no more, because obviously I can't sell anything that I don't have in the first place. And the same thing applies for take profit with the inverse use case. Again, with the 0.2% tolerance threshold. And before we go into the practice, just a couple of important points about the kind of occasional exceptions. So what happens if I, say, had 2,500 bought at 120 and I set the stop loss at 115? Of course, the prices dropped to 120 to 115, so I will not have my full 2,500 bucks when I do the sell. So should I enter this accounting for the loss in this case, or is the system smart enough to do it? Well, actually, the way you entered is always referred to original investment. So if you enter a stop loss for the 2,500, then it will sell whatever you've got in proportion to the original investment. You don't have to do the calculation yourself. Okay. Once you stop having, if you say go into the GUI and sell out all your whatever you've got, then you delete all the stop losses and take profits on the FIFO concept. So you don't have to then go and clean up after you've sold manually. And again, the conditional stop loss and take profits do not apply if the buy limit is not triggered. Okay, so that's kind of one basic point. And then relating to the timing of underlying markets, of course, it could be that, say, the price is touched at a point where one or several of the assets that are tradable is actually off market hours. I will not be able to say, if I have a Darwin, which is invested in Eurodollar and DAX, I will not be able to sell the DAX if the DAX is closed, okay? Or I will not be able to sell anything if it happens to be a CFD in the 5 minutes of rollover in New York, where we don't allow any trading. In those setups, the system will wait until the market becomes available again. But in cases where, say, partially, in the case of the Eurodollar and DAX example, so if this is kind of 3 a.m. in Germany night, then the Eurodollar is tradable. So I will trade for the Eurodollar bit of the trade, and I will wait until Frankfurt opens to clear the DAX portion of it, and funds will be blocked in my account to be able so that I can continue to do it when that happens. And last but not least, if for whatever reason from internal DarwinX maintenance, we do not allow buying or selling any Darwin, then we will, the system will then reject the trade attempt and it will notify you, and this is the last bit, via email. So think of it, because you've got a robot that's working 24/5 to monitor the Darwin prices, but you're not available at those times, the robot will, or the system will send you an email to confirm that something has happened, so you can then realize the next time you connect. Any questions so far? I appreciate it. It was pretty dry in the theory, so now it's going to get easier with the practice. But if you had any questions, we can clear those now. Again, one thing I haven't mentioned is that this presentation is available as a handout that you can download for your future reference if you want it. So that's available, and it will also be available to customer support going forward. Okay, so don't be worried if you've missed a slide or whatever. Furthermore, this is being recorded, and we will upload it to the YouTube channel for future reference as well. So again, if we're going to do the thing in practice, of course, what you can do with limit orders is you can introduce them in the system, you can review them, you can manage and edit them if you want, and you can even delete them. So let's go for it. I'm now going to switch over to my DarwinX account. And what I've got is, again, bear in mind, this is only available for demo portfolio. So down at the bottom, you see this is a demo portfolio. You will not be able for the time being to do this for a live portfolio because we haven't activated the functionality on live funds yet. Okay, so for now, demo only. So let's say, so this is my regular Darwin investment portfolio. I've got, sorry, clicking here, I've got 4 Darwins in it. And I want to do stuff with them. So for instance, let's say I want to do a buy limit order in case ERQ does something. So I go for trade the way I normally would with any standard Darwin, but instead of clicking the market order, I instead click on the buy limit order, which is a new addition to the thing here, where I want to say, well, I'm going to buy, say, let's say I enter £100,000. I would have to fund the system, but for now, let's just say I say 1,000, and I put the buy limit quote. For that, I've got the current quote. So let's say I'm trying to enter an amount of, say, 181. And in addition to that, I could add a conditional order. I could add a conditional stop loss and take profit to the thing. So I could say, well, if we were to fall down to 175, I would do it. If it were to go up to 190, it wouldn't let me. Why? Well, because if the 190 is above the buy limit, so it will not take it. So let's say, but I could say 175, and I take profit at, say, 185, which will let me. Of course, if I'm within the 0.2 tolerance range, it will not let me. You can play around to try and see the logic in your own user interface. But let's say I now enter this limit in the system, and boom, it's there. I get a confirmation of what I just did, which was the buy limit here for 1,000. I've got conditional in that a stop loss at 175 and a take profit at 182. And for the total that I've got, I've basically got take profits worth 2,000, buy limits worth 1,000, and stop loss 2,000, which you can see on this trade ticket, which I just entered. Now, what happens if instead of wanting to see things here, because I just did the trade, I actually want to review the stuff that I had in the system? Well, let's go for it. I can go for my open assets. I'm having some issues here now with the, there we go. So I can see there's pending trades in ERQ for £1,000, the $1,000 and another $1,000. If I wanted to edit these, I can come in and edit either the quote for the stop loss or for the take profit, because this is all referred to the buy limit of 1,000, which is I just entered. If I want to do a plain vanilla standard trade, like a stop loss, for instance, I can come and add it here. Again, the amount I would wish to sell, and the quote, say 156, and a take profit of 230. I mean, the numbers are just for argument's sake. So 200. Again, these are numbers I couldn't, for instance, enter a trade for 111 here. Actually, I can, but if it was my first investment, I couldn't, because the minimum investment into Darwin has to be, say, 200. But I guess you now kind of get the gist of how the whole system works. You have to go to the open assets side of things, activate the show orders in there, so you see the orders as well are disactivated, and at all times you've got the possibility of adding or removing as you see fit in addition there. Any questions, guys, as we go on this? So Michelle is asking, when is it going to be available in the live account? And the answer is, it's going to take, I think we'll give ourselves a couple of more weeks of testing and gathering your feedback. And thereafter, say, come mid-September, we'll go live if things go to plan. Any more questions? Okay, looks like everybody seems to be generally happy with this stuff. So if you have any suggestions on how to do these better, or any other use cases that you think we should incorporate, as ever, info@DarwinX will be delighted to take your suggestions. I'm just going to write it down here, so you've got it there. Yeah, we'll keep going with this. I guess you probably know where this is headed. If you wanted to do, say, trailing stop losses, or adjust the thresholds according to the evolution of the quote, well, that's something we have in mind. Gradually, we're going to appify the offering so that if you are a programmer, you'll be able to build little routines that will be adjusting the levels for the take profits and stop losses on the basis of that. And we also know there'll be a little community of investors developing these anyways and sharing as freeware for others to use. So rest assured that this is going to get better. But for now, this was the kind of first version. We think it's a big step forward in allowing you to manage the risk of the Darwin portfolio, and we look forward to your feedback. So unless there's any other questions here, I think we'll break off for the day. Thank you so much for being with me at this important webinar, and I look forward to also any suggestions that you might have. Okay. Thank you so much, guys, and yeah, see you on the next one. Bye-bye.